All right. We'll give it a minute and post whatever you want. But we're live now. Give it a minute. Post whatever you want. We're live. I think he's coming now. What's up, guys? Jerome's on the podium now speaking. Feel free to go to his YouTube channel, Global Flows or Capital Flows Research, and post any questions you got in there because I can see the comments. You have it up, Global? You're muted.
Yeah, I got it up right now.
Okay.
Goodness. What is the world coming to? You guys.
It was a good start for you.
Unbelievable. What happened to human decency in the world?
Talking about labor now.
It's like your dream compliment, bro.
Somebody bought ES for the last half an hour into this speech. Kind of interesting. Guys, if you're just tuning in, we're kind of watching the speech on the side, so we'll be able to talk a little bit more about it later. But if you have questions along the way, post them in his YouTube chat, and we'll try to get to them. Bitcoin is getting bid. So far, it seems like he's just saying a lot of, here's 17 different things that could happen. Don't forget, if you're going to say anything, you're on mute. I would gladly walk on this pad for the rest of time. I can.
Yeah, sorry, I was just trying to do some
You're
stuff.
good. You're good. Oh, we got a big rip in the ES right now.
Unbelievable, man. Here we go. This is America, baby.
Oh, he just said that. You hear him?
What do you say?
He said, based on the restrictiveness, it may warrant changing our policy stance. I think that's what we're seeing here. Reaction to that. It's like a little delayed. But
Yeah.
What a candle. That's the America candle right there.
Yeah, that is just savage unwind.
Will Laurie saying RTY is going to run 4% this session. Interesting. Now he's talking about the 5-year review that is upon this year. They're trying to check in to see if, they're operating the way they think they should based on the current economy. Nah, we'll try to touch base on that in a little bit when he's done talking. Michael Perez, no. But I would love some pictures. I'd love to run through some Zillow options of the Fed building.
Did you just talk about the Fed building?
No, somebody was asking a question if you touched me. I was like, that would be hilarious. It's like,
fun.
here's an update on the foyer. The sauna that was put in was really fantastic. I should be able to be Fed chair for much longer now. Longevity. He basically just said the neutral rate's probably higher than 2010s. Good question, Crep. I don't know. I would assume not too much longer. So maybe 5 or 10 more minutes. Articulate, I would say that's the $1 trillion question. We'll try to touch base on that. Powell's so fucking good. Goat. Ooh. Basically just said that there are times where labor could get a little dicey, but it wouldn't necessarily make them change policy. Might not actually be as much of a risk.
Yeah, he's basically creating this entire framework for him to like cop out of every single decision. That's all he's doing.
It feels just like a gig ascend. Like the vibe I'm getting is like a drop the mic, like retire my jersey.
Yeah.
I'm out of here. Look what I did.
Yeah.
Retire is fucking. You know how they retire a jersey? It's like I'm saying, like retire his suit in the Fed, hang it up in the rafters. You know, everybody can come in and just bow.
In the new foyer.
In the new foyer, just Jerome Powell. You know, or it should be the big picture that somebody made online of Yellen like grabbing his balls. Do you remember that?
Yeah.
It would just be epic. He's just there like this. Finishing up here soon. Let's fucking go. J Pow. Send it home, baby. Interesting. Now, did you ever think so many people that spend their life doom scrolling on Twitter would be paying attention to the Jackson Hole Symposium every year?
What do you mean?
Nobody cared about this. Nobody knew it happened until their bags mattered, you know? And now they're tuning in live at 7 a.m. Pacific time to watch Jerome Powell talk about 5-year policy updates.
You know, I will say that. Can you turn off the music, by the way?
Oh, yeah. I can't even hear it.
You're like the overstimulation bro that can just like handle 7 sources of.
Well, I don't even hear it. So.
Oh, you don't? Oh, I'm the only one hearing it? Wild.
I think so.
I don't even know if I wonder if the audience was hearing it. But let's see. Yeah, you know, it's funny because I think that the more and more. Oh yeah, everyone was hearing it. The more and more that I hear Powell post. Well, obviously, he's heading out, but just even the Fed and Fed speakers and things like that, they're moving away. They're moving toward this whole thing of almost like, you know, just copying out of their job, which is like, well, we just don't know. It's just like everyone's figured out you can just say it can go up and go down, and people listen to you without actually taking a view. You know.
You're saying he's becoming an influencer.
He's become a basically an influencer that doesn't want to share his view because he knows if he's wrong, then he's going to get roasted in the comment section.
Mm.
And I think that American society now, everyone is using the Fed as basically their political horse to use as an excuse for whatever political agenda they have. You know, if you think a certain thing is wrong in the economy, whether you're, you know, Republican or Democrat or whatever else it is, you use the Fed as a scapegoat. But the main takeaways that I have is that, one, you know, they are confirming, at least Powell, and the entire question we're going to go through over the next 3 months is all of this going to change as soon as Powell gets replaced?
Mm-hmm.
But I think it's showing that they're having this little bit of like a 2021 moment where they're just saying like, yeah, well, we're targeting inflation, but average inflation, and you're just like, whoa, where did that come from? Well,
right.
what's this bait and switch kind of thing?
Yeah.
And then the other thing is just that they keep trying to pull back their active exertion in markets, which just means that like 2022, they're actively in markets and pushing back on the market. They're like, no, push.
Mm-hmm.
Now they don't want to push back on markets at all. They just want to kind of create this subjective framework or cop-out framework and let the market just price things. And the thing is, if you just let the market price things, you're going to have, and you have inflation move up like this, and you're not actively putting restrictive pressure against it. You know, it would be different if they did not hold short end rates where they are, right? It would be different if they let the free market actually price short end rates and long end rates, but the market isn't, right? So now, you know, as a result, we're operating this tension where, you know, we have to take into account that they're still holding short rates, and they control short end rates, right?
Yeah.
And so the release valve is equities, which I think that's why equities are up on the day.
Well, like, gun to head right now, you know, a lot of people, you know, I was kind of going through Twitter yesterday, seeing what people were thinking about like potential outcomes here. You know, obviously a good reaction off the get-go, but as we know, that could reverse, you know, by the end of the day. We've seen it a million times. If you were to kind of think now, given the structure of everything you've seen over the past month or whatever, and then I'll get to your questions, guys, for sure. But like, Do you feel that this speech, this inability to, this wishy-washiness, this kind of like hands-off vibe, do you think that's going to allow the continuation of then the long end to just be like, all right, we're going higher?
100%.
Yeah.
Yeah,
That's
like
the vibe I get.
the main takeaway I have from this is, number one, equities are obviously bidding, and they're not on the labor market news that it's not just about what is actually happening. It's not that the market is rallying on a weak labor market. The market doesn't rally on a weak labor market. It can't. Right? Like, if the labor market's falling apart, people are stopping making money, and no more money is going to their 401k, and there's no money to bid assets. Right? So if equities bid on, the Fed saying that they're going to be more loose on a loose labor market, it shows that the labor market is not actually as loose as they're saying. Right?
Yep.
And so, the environment that we're in is inflation risk is greater than recession risk.
Yep.
And that, equities remain skewed to the upside. Bonds, we're shifting around in the day because Powell comes out dovish.
Yep.
And, you have the short end bidding to price a higher probability of cuts. But you'll notice that the 10s 30s curve is
You
steep.
want to show your screen, by the way? Maybe pull that up.
Yeah.
All right, let me get mine off. Feel free. This kind of ties in as you're going here to this whole articulate. If you're paying attention to the story that Capital Flows has been telling over the past few months, outlook on 2026 is a very vague, unanswerable question. But if you've paid attention to his stuff, you kind of have an idea of the direction of travel. And I think that's what we're getting at here as he pulls this up. And that'll give you a little bit more of an idea of like the potential things, the potential outcomes that could happen probabilistically.
I just shared my screen. I think you need to add it.
Oh, yep. Okay. There we go.
So just notice right here, you have ZT bidding way more than UB and ZN, right? Why is that? It's because, or the implication of that is that the curve is steepening right here. And you have, 10s, 30s making new highs, which just means that the action of the market pricing more cuts is not having as big of an impact on the long end. It just means that short end's pricing cuts, but the long end is saying, yeah, we're pricing cuts, but are we going to go into a recession or some issues with growth? No. Right. And that's why the curve is steepening, because you have, sure, bonds are up on the day, but bonds are reflecting that they're not moving up as fast as short end rates, or else the curve would be flattening. Right. If it just shows that Powell is still behind inflation, right? If Powell was falling behind growth and he was not cutting fast enough, the curve would be flattening right now, because bonds would be pricing in more recession risk, and Powell's falling behind, and then the curve starts to flatten. But we're seeing the opposite. We're seeing the long end lag behind, and as a result, the curve steepen because you have Powell falling behind the fact that inflation risk is greater than recession risk. And that's why we're having, Bitcoin and all of these other assets bid on the day. And, the entire question will be how much higher can we go? I've talked about, just the NFP level down here and the growth shock that we got there. And, just today, because we're, in my view, you're probably closing higher after a move like this, especially with the Russell. Right, like the Russell rallying like this, and outperforming is an indication of how strong growth is.
Yeah.
So, you're going to have really significant support at these levels here, and being able to, be long with stops closer to like 6,300 level, like that's basically the play and the view right now, and looking for, more shifts in bonds to, because, we're almost back to the point we were in bonds on the beginning of the day. we're kind of retracing this entire move.
Yeah, and you're always going to have this kind of initial reaction, and we'll see how it plays out. But basically, like, also in that comment about labor, I mean, if he basically just said like, hey, just even if like we get jobs reports that aren't the best, that doesn't mean we're just going to react and just fucking come and slam the door and price in more hikes and things like that. It seemed pretty dovish. So that's going to help something a lot like the Russell, right? Because it's basically like we're leaning towards a more like send it, right? And Russell's the one that could really go for a while. Yeah. You're muted.
Yeah, I totally agree.
Yeah. So that's pretty big signal, right?
Yeah.
That's pretty big signal there. And so, guys, like I traded these types of things for a decade. And as we've talked about, like there's always going to be an initial reaction, algos printing off of these things, retail reaction to that, traders trading. But it will be more interesting to see how the day closes, right? Because you're going to have an initial pullback, people taking quick profits. You might be having a reversal midday. It's just first reactions are always like a little sloppy, so it's just hard to like really, and I like seeing comments like this too. It's like, these are people, this is a good example, and it's not throw shade, but like take a comment like this, right? Price is currently on a downtrend from August 13th all-time high. First of all, what price? Because there's a bunch of different ones, right? So if it doesn't break the all-time high trend or the trend down or whatever, we plummet. Like, maybe, but like at what time frame are we looking for? What's your goal? What's your trade here? What market? Like I just have so many more questions. Do you just think like the market's going to fall apart if we don't break upwards? And then, you have the next, you have somebody like this earlier who's like, all right, we're just sending it. Buy everything. This is why I love markets. It's just because you got initial reactions. You have some people that aren't touching this. You have high speed algos that are sending it both ways. It's just an interesting thing here. How do you think about like if you were, I don't know what your positions are right now total, but like, are you looking to put positions on going into these events? Are you looking to watch it happen and then putting a trade on? Are you looking to trade right at the event? Like, how do you approach that?
Yeah, I mean, I never really trade right at the event. Like that's why I was off mic earlier. But like if I have a view on bonds, like right here, I mean, I'll short bonds if we like ticked up, right? Like, because I have a strong view on bonds.
Yeah.
Right. And that's not something I'm worried about as much, especially with bonds, because I have, stronger views on bonds right now. So I don't mind that as a response, but it has to go outside of the range that I already have. So I'm not going to just short bonds on the event and hope for the best. Like, that's ridiculous. Yeah. And then also is like, I think this is like for equities here, like this is a really, obviously on the day, this is a really strong rally. And could we go up another 1%? Yeah, sure. But like, my whole thing is like, how do I find extremes to execute at, not chase in the middle?
Yeah.
And I think that, what's going to happen, and it's like, dude, this is like just the way of the world is, everyone's going to look, they're going to just say, oh man, I just missed out on a 1.5% move. Mm-hmm. And they're going to see some memes on Twitter. They're going to see something and they're going to feel like they're going to miss everything. And then they're going to buy the high right here. And then maybe they make money. Maybe it just gets on size and they just keep running. More likely we're probably going to flush or something, whether it's tomorrow, how it is, right? Like, yep. It's just how it works. And, that's why I'm always, irrespective of like what people say about my views or my positions or what I'm not even really scrolling Twitter anymore. I don't really think I ever did. Really.
Yeah, sure you aren't.
Let me go scroll really fast to make myself feel better about myself. I still need to. We need to find the therapist or like the parody video that's just like all these issues stem from not scrolling on Twitter enough. Like if you just scrolled on FinTwit a little bit more.
I don't think I've seen that one. That's funny.
Um,
All right, so I mean, you were talking about this a little bit, but did it feel like 30-year barely moved? So why don't you talk about why that actually fits kind of into like your whole thesis here?
Yeah, I mean, the fact that the 30-year barely moved, like the 30-year is pricing long-term nominal GDP expectations. So there always is, when we talk about this like time horizon in markets, it's very different than like people in the media or something saying like, oh, well, this is my view. I think the whole economy is going to collapse. I'm just wrong on the timing. It's like, no, like you just don't, you don't have the right view.
Mm-hmm.
In the market, the yield curve reflects the multiple time horizons that the market is operating on, right? And so, that curve is always shifting, right? And so you can take views. I mean, I think a lot of the trades that I run now are curve trades, being long or short, or putting on steepeners or flatteners, basically. And it's just basically trading the spread between these products. And UB and ZB basically being like weak, have retraced some of the move and being weaker on the day relative to ZT, which is still just pinned at the high, is an indication of the longer term expectation of the market is not as aggressive as a short term expectation.
Yep.
And this is we've priced probably over 25 bips in sept. Oh no, we haven't. Yeah, so we're basically now at 100% probability of cuts in September.
Yeah.
So here's the September SOFR contracts. We're back at 25 bips. And then for Z5, we have to be over 50. Yeah. So, now we're at 50 bips of cuts. Any moves back up here is where you're going to probably start having the curve steepen more, right? So, basically, if I have a view on the curve, as we how do you say this? As you get more dovish or more hawkish relative to inflation, the long end will flatten or steepen. And so we're moving up here. As we move farther up here, if however high we move, I don't think we'll move to 75 bips. If we did, it would depend on why, but I'd probably get short. But as we move up higher, we're probably going to steepen in the longer end of the curve to price in the fact that the Fed is being overly accommodative and nominal GDP expectations are going to rise.
So, I mean, as you say that though, like, as you say, overly accommodative, do you feel like that is like a pretty pivotal, sharp difference than like yesterday? You know what I mean? Like, would you look at today's speech as like, okay, like that told me a lot of what I needed to know. Now I'm a little bit even more clear where we're heading forward?
I think what it told me that I didn't know is how bought in is the Fed on allowing rate cuts to be priced in the forward curve with inflation risk.
Right.
That's the main thing. Because it
could have battle it. They didn't come in battle.
Yeah, they were just basically coming into the meeting. The idea was, okay, well, maybe Powell will do an FU to Powell or to Trump, right, and maybe he'll come out cautious just because inflation has come in and we've retraced the NFP level and we've seen some PMIs come in above expectations, and other Fed chairs or governors have said, inflation risk is actually high, and we've had 3 inflation prints that have come in above expectations, and maybe he'll moderate his language a little bit and not shift the framework to overweight growth, right? Because he's not going to say, hey, we need more cuts. all he's going to do is shift his language toward growth risks instead of inflation risks.
Right.
It's just like he's just pivoting.
Yeah, I like to simplify this. So just real quick before you continue, it's basically as if he's kicking the problem that he has been talking about for a long time as a possibility. He's basically just kicked that to the next Fed chair.
Totally.
Yeah, that's what it feels like. And when I think of that, I think, yes, keep sending the fucking Ponzi, baby. Let's go. Sorry, I just had to throw that in there.
Yep.
Oh, real quick before you, if you're gonna pull something out, I love stuff like this. BBB DDD can't focus with this guy walking, constant moving. Yeah, bro. Look at me. I am a goddamn legend, putting in more steps than you've made in the last month. You fat. No, I'm just kidding. So shout out to BBD. All right, let's see here.
I do love.
Just keep it coming. I love it. Here we go here. Great PFP here.
There we go. Come on.
By the way, as he's figuring stuff out, guys, if you don't mind like sharing this on Twitter or YouTube or putting more questions that you might have, this is a good chance for you to get Global Flows to answer directly. There's not that many questions. So if you have one that's really popping out at you, this is your chance to do it for him to focus solely on what you're asking.
So I think
we're going to be doing this more for kind of
totally
paid subscribers down the road. So this is a good chance right now for people to get in their questions.
This is a breakdown of inflation swaps, and basically inflation swaps across the curve are just all up on the day, pricing more inflation.
Mm-hmm.
So that is just the indication in my mind, that along with everything else in the curve and everything else. Inflation risk is higher than recession risk. And the greater convergence you have that's true independent of the Fed's perception, but the Fed just got more dovish relative to that.
Right.
So, when the Fed is getting more dovish into that, that's when you have 1-year inflation swaps rise.
Yeah. Okay. I see that. That makes sense. This is interesting. I just I like to think broadly, and I just, after having kind of, paid attention to what you've been saying over the last few months, it's all kind of going that route. You know what I mean? So it's still looking like we're going to have a situation here where we're more accommodative, less, actually, it really stokes the fire of your whole thesis, I guess, a little bit, because if there's less fight from the Fed from the other side to come in there and kind of ruin the party, it will allow for a quicker, and who knows what quick is, right? We've talked about that. Quick could be a month, quick could be a year. We don't really know, right? Go back to the late 1990s or whatever. Long end can go up. We could have a strong economy. We can have higher inflation. We can send stocks. We can send gold. We can send Bitcoin. But this just adds more stoke to the fire of the back end of that, right?
Totally.
When is the next FOMC?
It is, September.
Mid-September, probably.
It is September 17th. There's 3 FOMC meetings into the end of the year. September 17th, October 29th, and December 10th.
Yeah, November's off.
Right now, the entire question right here is if we go to this level in this SOFR contract, in the Z5 SOFR contract, we're getting a cut at every single meeting this year, at all 3 meetings. If we stay right here, we're having 3 meetings with 2 cuts. So 1 pause at 1 meeting.
Can you explain to people what the Z5 SOFR contract is?
Yeah, so this contract prices, it's the market's expectation of how many cuts we're going to have over a certain period of time. So, if it's the Z5 contract, the December 2025 contract, then it's saying how many cuts are we going to get between now and the end of December or the end of 2025.
Right.
And that's the market's expectation. This contract has to settle at whatever the Fed does. Like it's built into the actual contract. And so that's how interest rates get priced. And these are just the short-term interest rate contracts that are pricing that. And so if you have whatever the Fed's ultimate decision is, this contract will go to that level, to that.
It's like a bond that's coming due.
Basically. I mean, yeah. In a sense. Yeah.
Yeah.
So if this contract is pricing 50 bips, that's the market's expectation. If the Fed ends up doing 75 bips for this year, they cut it every single meeting, this contract has to move from here to here.
Right.
And so it is always pricing the uncertainty in the interim as we move closer and closer to whatever the destination is in the contract.
I see. So right here, when you look at this, you might use this as contextual right now and be like, okay, if I think we just had signal that we're going to be starting pricing in cuts over that time, if you personally feel as if some of the uncertainty of your bias has been removed, you might then go look at how to express that trade the best.
Right.
Mm-hmm.
Yeah. I mean, I think that it's all about half of trading is getting the right expression, right?
Yeah.
I think this is where everyone will basically only have one expression of like Bitcoin or.
I knew it was coming. I knew he was going to use the Bitcoin example. He was going to say you could just take out a leveraged gold or ESP position because, guys, he doesn't believe.
I believe more than all you guys combined. I am more.
You don't
bullish.
believe Bitcoin's changing the world, man. You just think it's going to go up a lot, which that's fine.
But that's how it does. But that's the entire point that you guys use about how it's going to change the world. That it's going to go up.
I don't know. I'm thinking about the guy in the Congo that needs a stable coin. Me and Brad Garlinghouse and the administration, we care about the little guy in Africa. That's what it's all about.
Yeah.
Right.
As you don't donate money to anything else in Africa.
I do donate some money usually it's to friends when they're building a business so I could get a return. But it feels like a donation because it never works out.
Oh.
I'm sorry, but yeah, go ahead.
No, I mean, I think that's, I mean, how do you think about trade expression for yourself, whatever it might be, and how you kind of move down the kind of different risk curve or products or stuff like that? Like, how do you think about trade expression?
Well, a couple things. Like I have a couple, there's a lot of tax implications and stuff too for longer positions, but like I have a couple things that I want to hold because I do want to support the ecosystem and believe in, right? Like Bitcoin, and I'm building a business based on it. Like I just really like it. So I'm going to express it in there, but outside of that, when it comes to others, I try to stick to markets that I have like experience in and understand the flow and ranges of. So like maybe it's not going to be the best way to express a trade, but if I know that personal market the best, I feel like I'll be a better executor in that market, even if it's like the third best way to express a trade, right? So like back in futures days, like let's just say we had not FOMC, a WASD coming up, which a lot of you guys might not know what WASD is, but it's like, let's just say every month and then 4 times a year, there's like these big agricultural reports that come out. It talks about planting, harvesting, like the yield, whether there's shortages, all this information. And let me tell you, it's a really fun number. I don't really love trading non-farm payroll. I don't really love trading FOMC, but WASDs were always fun because you got corn, wheat, soybeans, cotton, all of these. And I knew how all of those worked. So basically coming into a WASD, I would say, all right, if there's going to be certain movement, which of these have I been trading or am I executing the best in over the last month? That'll be the one I like focus on to express my like reaction to the number, because I understand the flow, where the ranges are, where the levels are, things like that. To just go express, just because like Capital Flows says, hey, this is the best expression of a trade, but you've literally never traded in that market before, it still might be the best expression for capital flows, but it actually might not be the best for you. So it's like something you should probably think about is like maybe you're noticing the best expressions are some of the things that you've suggested. Well, then you should start trading those. Like go get a feel for them. Use really, really small size. Feel the internal workings of a market, see how they gap or don't gap, or there's huge liquidity or an empty order book or whatever it is, because, and then you'll understand maybe where to put your stop losses more, and, can it wick and, whatever. So that's kind of how I think about things, if that makes sense.
I love how this guy's like, hey, I'm in Africa. Trust me. No one cares about stable coins here yet.
Yeah. Depends where you are in Africa, I guess. Like, well, so far he's got internet, so it's a good start.
Yeah, I do think it's funny that like everyone in America is just like, well, what about people in Africa? And then like you talk to people in Africa, they're like, hey man, like I mean, it depends on where you're at, but there's like some amazing places in Africa, and just depending on where it is. But
I mean, speaking about that, look at this comment. Ski God, move to Europe, better work-life balance, easy step cheat code. Now, here's the thing. You're talking to the wrong two people. We love America, okay? We are America fiends, all right? I love Europe, all right? I get it. I go over to Italy. I take a breather. I have a spritz in the middle of the day, and I'm like, wow, these guys all get it. They're not always trying to keep up with the Joneses. They have real relationships, and they can sit here off their phones and smoke some darts and talk to people about life. And then I go home, and I'm like, yeah, Italy was cool, but like I'm not, I need a break from Italy. So, and look, my work-life balance is fantastic. Look at this. I mean, do you see this? You can't have work-life treadmill balance under my desk.
You can't have work-life balance. It doesn't exist.
Yeah, yeah. Like, see, this is where we have the polarization of ski and flows. I really want Flows to like get somebody pregnant and have twins and just get a wrench thrown into his life to see how many posts he talks about grind and like, like I could be better.
We'll see.
We'll see. What would be an indication of things starting to fall apart? Okay, so let's touch base on, we're tracking down your thesis or whatever. What are some of the signals you've talked about in recent reports and kind of things you're looking for that might start to indicate like, hey, this is starting to affect risk assets?
I think the main risk right now that would impact risk assets negatively are long end yields beginning to blow out. And actually, I just built a model that maps this very thing.
No.
And it's going to get published every single day on the Capital Flows Research website. Imagine that. This is based on, it's not taking into account the catalyst that we have. But here is a regime monitor that I just built, and it's going to be published every day on the Substack that maps our interest rates putting downward or upward pressure or neutral pressure on the S&P 500. So in red, it shows when interest rates are putting downward pressure. In green, when interest rates are putting upward pressure. Because people are always worried about the downside risk in ES, but like a lot of times, interest rates can actually put upward pressure. Like if you have interest rates moving up at the same time as equities, like it's an indication of growth. So basically, take these regimes, model the impact interest rates are having on the S&P 500, and then we say, okay, let's take that regime and let's do a scenario analysis to say, if interest rates moved by 20 bips or 10 bips, where would that put the S&P based on the current regime that we're in? And basically model, okay, if rates move up by 15 bips, then we are likely moving higher in the S&P 500 right now. And if they move down, then we're likely moving lower in the S&P right now. And then this will flip and have a correct scenario analysis based on whatever regime that we're in. And then you can see here, this panel at the bottom right here is basically the variance that we have. So this range can expand or contract based on how volatile interest rates are, or how much of an impact they're having on the S&P. And so, the entire play here is the fact that interest rates have a massive impact on every single asset in the world. The question is, okay, how do I map that impact? And this model consistently does that. It's updated every single day so that you can always know what the current regime is and what the scenario analysis is for the impact. And you can make a more informed decision from there.
Yeah, I think that's super sick. You showed that to me yesterday. Is this just for paid subscribers?
It's going to be, yeah.
Yeah, I think it's like insanely powerful because if that thing has any sort of success over a significant period of time, I mean, if you're a person that's trading, what a good thing to refer to every day to give like, a more conviction or less conviction to an idea you have, because if it aligns with that, like, I mean, it's totally on like Donkey Kong, like those are huge. It's not a silver bullet, but it's like it can add, like if you stack convictions like on top of each other, all of a sudden your trades can get bigger and you can make way more money.
Oh yeah. And I think it's also about like what we talked about trade expression earlier. Sometimes I have a much clearer view or higher conviction view in rates than the S&P. And so I'll say, oh, okay, like maybe I do want to put on a trade with less size in the S&P. Okay, well, what's my rates view and how is that transmitting into the S&P? Oh, it's not really having the same view. Like, oh, okay, if I'm short bonds, do I really want to be long the S&P or short the S&P here? Oh, probably not, because this model is saying that if my view over here comes true, then it's probably going to cause this other trade to go against me. Oh, maybe I should just stick with bonds for now and not, and not put on aggressive size in the S&P for whatever view that I have. So it's all about mapping, all of these different relationships, I'll give me 1 second. I have to take something.
Yeah, no worries. So Block, I would say, if you look at some model build out like that, he's going to be looking for that regime to flip to, and it might be at that now, but it'll depend on how the update is after today's Jackson Hole. But, if there's large volatility and the indicator flips towards inflation or long-term rates impacting S&P to the downside, those are the things that will start to be adding on to the idea that things could be falling apart. So, people always want to know when, but it's more about like, where are the signals that are highly sensitive signals that can help you start to switch to the other side. Are you reopening your longs on Bitcoin now? Well, Naveed, once he gets back, I'll let him answer, but my logs have been open. They're open every day. Because Bitcoin's going to $1 million within 4 years. Don't believe me? It's fine. As they say, everybody buys Bitcoin at the price they deserve, So I've heard. Does the US 10-year drift higher from here? Also, does the USD continue its trend lower? This will be a good question for Flows when he's back, because even though I believe he's answered a little bit about the 10-year, which I believe like he does expect to drift a little bit higher, or at least stay where it is, we haven't exactly talked about the USD. So we will touch base on that. Give a little recap of markets right now. We have S&P 500 up 1.5%, NASDAQ up 1.6%, and R2. Shout out to the guy in the comments who said Russell will go up 4%. It is almost up 4% on the session. And I mean, the session's only been open for an hour and a half. That is a large move. And we are still, just let me know when you're back, Flows. I'll keep talking. We are still a 4.5% move or so from Russell hitting all-time highs, which will be a triple top. And you will probably hear your timeline talking about Russell and small caps, and it's on. Like we've talked a little bit about Ethereum and Russell, how there's like a decent correlation there. Let me see if I could get that up right now. Add Ethereum to this. Okay. This is the daily Russell chart with an overlay of Ethereum in pink. And then Russell, I have a price alert here for all-time highs. All right. So if you want your little story for Ethereum all-time highs, Russell all-time highs, long-term inflation expectations not ruining everything, correlation for interest rates going up and being supportive to equities, volatility compressing, that is your story for ultimate risk on euphoria, right? So like these are the we talk about chapters in a book a lot. These are the confluence I look for in things to be like, all right, now if I think all that is happening, where do I want to express that in the areas that I know pretty well? Fart coin, maybe, I don't know. Just saying as an example, it could be wherever. Where are the things that are going to get you the best returns? Maybe that's just SPX for somebody. Maybe that's buying calls. Maybe it's buying outright, whatever. But these are some of the things I look for. Get this out of here real quick. Just go over a couple more charts while he's off. This is the VIX. Let's drop this down to like a couple hours. So we came in from yesterday. One thing that I was worried about in stocks and Bitcoin and stuff, and it kind of played out, is, we had a down move in Bitcoin from 125 or whatever it was down to like 116, 17. And volatility in Bitcoin and in the VIX weren't jumping. It was sitting down at lows. And honestly, I wanted to see things. If you're looking to reestablish longs, it's a little scarier when the VIX is just chilling at 14, and you want to see you want to see volatility spike up so that when you put on your longs, there's at least some compressibility in volatility to kind of provide that bid, which we saw yesterday. We finally saw a move in the VIX from equities up to about 17. And then into Jackson, I don't know if you want to call that de-risking or whatever. Who knows? You never really know the true reason. But after Powell's speech, we have slammed the VIX back down into the 14.5 region now. Pretty interesting. So what I mean for Bitcoin is since we hadn't spiked in the VIX yet, I was we might have more downside, which we ended up having more. We pulled back all the way to 112, even 111, I think. You back?
I'm back.
All right, let me put you back on here. I had thought this was a good question. We touched a little bit on long rates, but we haven't really touched on the dollar.
Right. So here's how I would think about this.
You could talk. I'm going to grab a water.
Go for it. Yeah. So we have seen, let me put bonds so that it's more intuitive for people. We have seen a correlation that is, broadly a positive correlation between bonds and Euro USD. In other words, as bonds have moved up, you have the dollar falling and Euro USD pushing higher. And the reason for that is that when you are thinking about how two countries are pricing the net assets and currencies and things like that in your specific country, when you have bonds rallying like this and also equities rallying, and you have it's primarily a valuation expansion, or you're getting your bonds are becoming a little bit more rich relative to cheap, right? In that respective currency, that currency is pricing not only the nominal returns of those assets, but also the real returns in that respective currency. And so, what I would say is that, when you see the dollar falling on a day today, that is a indication. Why wouldn't the dollar be rallying today as stocks and bonds are up? Because that's happened during periods of time. And it's just because we're pulling a lot of the returns in the currency into the present, right? And that can happen for a long period of time until there's a constraint. But right now, the ECB, the BOE, every major other central bank is not as aggressively cutting or allowing cuts to be priced in their forward curve as the US. So basically, the ECB, they front loaded their cuts earlier this year. And so did the Bank of England. They also did that in some fiscal packages, which is why you actually had the dollar rally for a period of time this past year, and then also part of last year when we were pricing it in. Now, we've had the dollar fall primarily because the U.S. has been dovish and overly accommodative into elevated inflation, right? So that policy error by the Fed, right, where they're overly accommodative relative to conditions in the economy, that's being priced by a weaker dollar. Like, you are devaluing your currency in one sense on a relative basis to other countries when you're doing that. And that's going to keep happening until the ECB switches or the Fed flips. So, my view is, you're probably going to have, as long as the Fed is continuing this kind of air and this mindset, you're going to have Euro USD push to, new highs. And you'll probably have the dollar drop to, if we're just talking about the DXY, probably going to have the dollar drop to, these, 94, 96 levels until you begin to have a marginal change in the forward curve. So basically, when the forward curve prices more of a shift in the ECB being less hawkish or maybe a little bit more dovish, and then you have the Fed being a little bit more hawkish, and you have that divergence come back together a little bit more, then you'll have that begin to take place. You'll have the dollar begin to make a bottom.
Also, don't forget, Trump's going to come out today and talk too. I was thinking like he's going to come prepared to clean up any mess that happens, but I'm sure he's a little bit
totally.
He's probably happy right now.
Totally.
Why do you put so much focus on inflation swaps when it's a very illiquid and clubby market? I don't know what clubby means, but do you is it something you actually well, what's your opinion on that? I won't get too much into the like order book style, but like,
I think that's an important question. I think it's number one is, inflation swaps represent the settling, they're specifically pinned or settle at CPI, right? They're based on CPI. But inflation swaps functionally move in lockstep, except with some actually better tracking error because you don't have some roll in break-even contracts. But they move with greater clarity, and they basically move in lockstep with break-evens. And break-evens are just your nominal rates minus real rates. So it's not as much like they're so illiquid and so they don't provide a signal. I could use break-evens, which is nominal rates minus real rates, and those provide just as much of a signal. And they're very, like, I would say inflation swaps have plenty of liquidity to provide the signal that I'm talking about. And the fact that you have, you could say, let's say you ask like, oh, okay, like maybe they have liquidity, but they're so disconnected from the actual bond market that even if there is just a little bit of liquidity, it provides no signal. If that were the case, you would see massive divergences in inflation swaps versus break-evens, which we don't see. And break-evens are just the actual, it's, nominal rates minus real rates. So I would say they provide a ton of predictive value in how you're seeing the expectation of the market price inflation imbalances. And if you're not using those, you're basically using break-evens. So I would say it's what everyone uses, and for good reason. I think there's a lot of validity in it.
That's fair. Plautus, what the stance Powell just made is specific or all future data weakened for the time being in its effect on market movements. So I think going back to your point, has the fact that he just kicked a lot of the responsibility and the the hawkishness out a bit? Does all the future data coming in mean a little bit less now? Does that make sense? I think that's what he means.
Yes, it does.
Like, will somebody see like a little bit more of a hot CPI or PPI or something in the next 2 months as being less impactful because the Fed is basically not going to take as hard of a stance or something?
Yeah, so I don't view it as binary as that. I just think, let's say that the Fed comes out and explicitly says, hey, we basically don't care about CPI prints anymore. We don't think they're real, even if they are. Like, let's say CPI is the best reflection of inflation in the US economy. Let's just assume that for a second. And let's assume that Powell basically says, hey, we're not going to acknowledge its existence at all.
Mm-hmm.
It's all about how the market is going to price that nominal and real risk. So if Powell decides to ignore it, if the Fed decides to ignore data, that's fine, right? Like, the data is meant to give them an insight and triangulate what is actually happening. So if they don't do that and there's actually inflation in the system, then the long end is going to price what they aren't. And equities are going to price what they aren't. And the dollar is going to price what they aren't. So I don't think about it as like an objective thing of like, oh, we're going to move into this period of time where, you know, they're going to start not acknowledging these data prints, and data prints aren't going to matter. Like, the data prints will matter. It'll just be if the Fed decides to, like in 2021, if they decide to pin rates at 0, inflation prints still mattered, but it just mattered for a different part of the market.
Right.
Because that, risk can never be destroyed. It can only be transferred. And the market is the best in the world at transferring risk and destroying the exact person who is holding that risk. And that's going to be either in the long end or the currency.
That's a savage comment. Yeah. Okay, that's good. I like that. Like, energy can't be created or destroyed or whatever, right?
Well, yours can, but yes.
Got to go somewhere. Whatever. I don't read books. Here we go. What are your thoughts on extreme? These are great questions, by the way. You got a good following. They're not just, there's some retarded questions, but like, and I can use that word now. It's 2025, but like, some are bad, but like most of these are fantastic, guys. So
totally.
What are your thoughts on extreme euphoria phases besides the market regime? What else needs to align for us to see such conditions?
Such a good question.
Yeah.
This is going to
basically, the bro wants to know when our bags are going to go way up.
This is good because I feel like this is the opposite. This is the way that I think about this and the way that you think about this are complete opposites. About like how to think about like these different changes and cycles and stuff like that. Because I would say that, and you can come and share your thoughts on this because I feel like it'll be helpful. I did a whole video on this. Where is that video? I don't even know. It's on the YouTube channel. I think it's what was the video that I did on that? Actually, you said it was. I think you watched it. Remember, I talked about this chart. But
you have so many videos. I can't remember which one.
Yeah, it's on the YouTube channel. If you're brave enough, you'll go find it. My view is that this chart of, are we in extreme euphoria? Are we in disbelief, anxiety, whatever it might be? This might work retrospectively, but it's very difficult and probably impossible to use it as a metric in real time and foresight to make active decisions. Because one, this could take place, like this entire thing can take place on a 1 minute chart, on a 5 minute chart, on a 10-year chart. Like you can take this and it's just a move up and down, and you can map it across any time horizon. And then two is trying to correctly map each of these has such a low signal in social media today.
Yeah.
That to be able to do that, like I've even done, I would say I've had a more sophisticated model that I've built on some stuff like this, and I use it to look at it, but I don't use it to make active risk decisions. Like if you pull all the data from Twitter and every media website and then synthesize it and like filter it by asset and then map how it's changing in real time for sentiment and stuff like that, then you can begin to quantify how quote unquote sentiment is moving with price. It still is like not helpful in making decisions.
You're telling me that the fear and greed index isn't like the sole thing I need?
That's like I feel like saying markets move. I forget who told me this, but they were like, saying markets move in cycles of fear and greed is like saying the Twin Towers fell because of gravity. It's like, okay, maybe, sure, okay, that's true, but that provides no information for whatsoever that is helpful to me at all, to like what actually is taking place. So I think that what you want to do is have more of a framework that is just redundancy planning, and it has a path dependent framework, which just means that I have scenario analysis just for where price is going to go and why it's going there, instead of using this framework. Great example actually is, I feel like we kind of joke about this, but like Chamath released his ETF or SPAC at like the top a week ago or something like that, or the quote unquote weekly top. We're back at that level now in ES. Yeah. So like, was that the top or not? Was that a sentiment signal?
Was he not a top signal now?
Yeah. So it was. I mean, hey, I wrote a thread and I referenced it as like, because I thought it is a sign of liquidity. Like, but I would not use that as a sole sign. Like I would map SPAC and IPO flows. Yeah. But yeah, I think it's you want to be careful with that and move more to a macro flows approach, in my view. But how would you say your understanding and thought process around that has evolved? Because I would say you're better at kind of reading the room in that sense than I am. What would you say about the kind of idea I just laid out?
Yeah. Well, the problem, like one thing I thought about when you were saying is like, when there's a good trade, like it only lasts a certain amount of time, right? That's why there's like no silver bullets in like technical analysis or whatever, because like markets find opportunities. Like you can't just find like a trade that works and like you could just do it over and over and become a billionaire, right? Like the market finds the opportunity and then everybody starts to do the trade, and then that trade dwindles down to nothing, to the point where you're almost taking the opposite trade because everybody's taking the trade, right? And like over time, as information has moved faster and faster and noise has gotten louder and louder, you guys notice now that like being a contrarian 10 years ago was pretty rare and nobody understood why you would take the other side. Now it's like the first thing people want to do is take the opposite side of anything, right? Because they think that's what a good trader does, is like they take a contrarian take with good risk reward. And like, if I think about like what does my timeline say, which by the way, think about your timeline, it's an algo driven to like, whatever. But aside from that, like they want to be the one that can just like, take the other side of it. Like, oh, a SPAC was put up there by Chamath, instantly, top signal, whatever, right? So now there's this collective contrarianism that causes even more. Like if you go through your timeline one day, you can see 10 posts that make you think we're literally going into a fourth turning collapse, and 10 posts about how the AI game is changing efficiency and productivity and we're about to go into like a golden age. And you need, like you said, you need to start to have some sort of way to sift out any meaningful information and way to process all this information, because everything is at extremes. Often we're not actually moving towards a tail, and you need to be able to function in the middle of that. So I'm still trying to figure out how to best maneuver in these markets. And I go back to the things that I'm good at, which is like, what markets do I know well? How can I find asymmetry with really low risk? And how can I hold on to those winners? And I try to like, as everything gets harder and noisier and more competitive, my contrarian take is like, how can I zoom back, zoom out, and simplify everything to remove all of these inputs that are just trying to like rattle me. I think one way you do that is you try to do less scrolling, right? You want to let your thoughts clear out and be original and be confident in kind of your own thing. Whereas I'm the opposite way. I'm letting it all come. I'm just like, give me all the takes, and then I want to work from there. So that's kind of how I think about things. I just think we're in a very difficult world when it comes to like signal and noise.
Totally. Well, I also think it's kind of funny because the signal and noise and interpreting things are one thing. It's connected, but like the risk management, like managing risk is very basic math. Like there is not like a lot of complexity to saying what should I size my position to be, and where should I be right and where should I be wrong. And it's interesting. We've talked about, you know, the role of financial advisors before and just like personal conversations, and how they're just there so that you don't have to think about, oh, if this goes here, I'm going to do this. If this goes here, I'm going to do this. Because they're just like, I can't think about what would happen if I was wrong. That's too difficult for me. Right. And so I just think as a trader, when you're just managing risk and thinking about things, I'm always looking at, you know, if I want to talk with someone, I care less about, or I care most about how my conversation with them or interaction with them helps me learn something about the scenario analysis or the changes, because the math behind or not even math, but just the process of risk management is not that complicated.
People make it seem that way.
Yeah,
people
I mean,
people get fucking wrecked. I feel like people have forgotten the simple risk management side of trading. I mean, I spent a lot of time in the crypto space, so like,
totally.
It's unbelievable how many people are getting washed.
Well, I think it's part of it is, I think, I mean, obviously people aren't always coming in with capital, right? So they have like maybe a couple grand or something like that, which is why, like, I feel like I always tell people, like, hey, if you're going through the Substack, whatever else it might be, just go through the free stuff. Like, there's so much free stuff. Like, just go through the free stuff if that's the stage of life you're at and you're just learning. Yeah. Like all of us have been there, and that's like that's a great spot to be in a sense, because like your greatest asset is your time, not your $1,000. And so I just think it's an awesome spot to be in one sense, because you get to be a sponge. But I think that, you know, everyone is now. Everyone is so with the fact that now all of the wins and losses are publicized so aggressively.
Yeah.
And it's not just that there is you know, winners and losers, but all of the winners and the most extreme winners, they're not just out there, but they get put directly in your face.
Yeah.
And you feel like if I don't make that level of money or returns in a single trade, I'm not doing it right.
Yeah. I'm less than. I mean, that's social media, right? I mean, that's people, hot chicks sharing stories and making other girls feel bad about themselves, or people traveling all the time and making you feel like you're never doing anything with your life. It's all the same shit. I mean, like, I look back and I did poker for, what is it, like 5 or 6 years. And I look back and I pretty much broke even at the end of it all. Made some money, spent a lot of money, lifestyle creep, and I ended up with nothing. And then it took me 2 years or a year and a half or so to even really learn the structure of being like a trader and stuff. So you're talking 7 years to get like a skill set of risk management and all this stuff, and with nothing to show for it. So if you can't take like 2 months and go like grind out the capital flows like free stuff, like, you don't really deserve it anyway.
Totally. Yeah, I think it's great because everyone. I was talking to my friend about this, but it's just the idea of, you know, I think about the biblical principle of just, hey, if you're faithful with little, you'll be faithful with much. You know, just like I am just focused on whatever stage I'm at. I just need to focus on being like faithful at the exact thing that, like, at the exact place that God has me at. And I think that, for me at least, framing my stewardship and faithfulness relative to where God has me, instead of playing the comparison game, is the key to like exiting the rat race in a sense.
Mm-hmm.
And I think that's so important because you can have even way more money and you're not being faithful with it, or you're not being a good steward with it. And like, that's, in my view, you're not really fulfilling the potential that God has for you, right? Or that you have in life at the moment. So I just think it's so important. I mean, it's the whole thing. It's why people hate trust fund kids, right? Because it's, especially on Twitter, they're just like, oh, you have all this stuff, but then you're just kind of hanging out all day and not doing anything in the world, right? And it just kind of depends. I feel like I've met people on both sides that are trust fund kids or whatever else. Some of them are amazing people, and then you meet people who are not that, and then they're amazing or horrible people. So it's all about who you decide to be.
There's your lesson for the day. All right, what are your levels of process that will invalidate your overall macro idea? I'm sure you've touched base on this before, but
Yeah.
in a quick sense, don't go from the ground up. Just we'll try to move through some more questions. So
yeah, I would just say this level in the 6,200, 6,300 level in ES. If we make a weekly close below that, I'd probably go neutral equities. And then for the long end, like if we close above these levels, I'll basically have been wrong, or my timing was wrong, and I would be likely neutral bonds.
Mm-hmm.
And then for ZT, yeah, if we move above these levels right here in ZT, then I'll maybe a little bit higher, depends on how the shape of the curve is. Like I'll basically be wrong in that, but I think the entire point is that we're likely to face headwinds in bonds during this period of time, and equities are likely to continue moving higher. And then for gold, I shared this trade on Twitter, and then I'll share Bitcoin too. And we're in the money in gold now. We've been moving up. And then for Bitcoin, these levels here,
hundreds of thousands.
We're theoretically moving to 700,000, according to a rumor I heard. What is that?
Just if you scrunch the chart, 700,000 doesn't look that bad,
Yeah, I mean,
here's the thing: people don't understand illiquid gap ups. Okay, they don't get it until they see it and believe it. And just think of how cool I'll look if it actually happened.
That's all that matters.
Legendary. Okay, I think that's pretty straightforward. If the price is the ultimate judge. If the prices change in all of the kind of areas you have laid out that would back your thesis, then you will have to reevaluate, go neutral, and say, timing wise is off, something is off, let me restart my process.
Yep.
And I think that's the sign of a good trader. That's why charts are valuable to determine, like, hey, where's the price telling me that, like, I'm seeing the market wrong here, something's up. I don't know what it is, but we'll figure it out.
Totally.
Touch base quickly on this one, just as a little specific, but EWW and is EWW emerging?
It's the Mexico ETF.
Oh, Mexico ETF. Okay.
We should go there sometime.
From a technical perspective, what's your view currently in relation to recent development with the speech?
I've been bullish for a while. I mean, I've been laying out the view on the Substack for, I don't know, almost a year now. I mean, at least 6 months. There's a video back there. I'm still bullish. I just think you're going to have so much capital get shoved into Mexico, and it's just going to be insane. And I think you're going to have Mexican equities, EWW, and the peso rally. That's my view.
Maybe I'll just go to Cabo, get boots on the ground, and really feel like what's going on down there.
We should do an entire vlog, like Investment Biker. The Jim Rogers Investment Biker thing?
No, but I can imagine what it is. He like rides a motorcycle around and goes and meets people and talks about markets.
Well, he was the guy that he was an analyst for Soros.
Mm-hmm.
He was like the commodity analyst and other analysts for like Soros, and they worked together at the fund. And then he, retired and did his own thing. But he basically, I think, is one of the only people who has rode around the entire world, like through every single continent, and
wow.
On a motorcycle. And he basically is like going through every spot going to whatever financial exchanges there are, just buying stock or stuff like just whatever it might be.
That's funny.
So he's like this old guy now. I don't know how old he is, with like some young wife, and he has like 2 girls or whatever. I think a family that, and he has to be like 70 or 80, and he has these like 10-year-old girls. So it's kind of funny.
What a legend. Guys can never stop making babies. Crazy. Well, you will be visiting me in about a month or so. Maybe there's something, but I don't know. You're an anonymous dude, so travel vlogs aren't exactly that exciting. What are you gonna show the sunset and then just talk in the background the whole time?
I know. It'll be good. We'll do something sometime. We'll see what happens.
All right. Quick question for Master Capital Flows: is your view on the 10-year going below 110 as we melt up still the same after this speech?
I'm gonna wait a little bit, like to see how we begin to trade through the rest of the week and things like that. But my view is still that they're going to face significant headwinds, right? So like bonds are going to face headwinds. I've been playing a lot of some of the shorter term moves with steepeners as opposed to an outright short, just because of this range compression we've seen. So, as if we move to the top end if we price like 75 bips in the Z5 contract and the curve begins to steepen, I'll get more aggressively short the outrights. But in the interim, like a steepener is just like a better expression than the outright short, because you have days like this. Like if I'm long a steepener, I'm up on the day, whereas this, if I'm just short bonds, I'm down on the day.
Yeah.
That makes sense, right?
Mm-hmm. All right. Just going back real quick, the move to Europe movement is a scam, and people who complain about America just don't know how to live here. Yes. Hell yeah. Like these people have never been to a lake house in Michigan with the boys on a 4th of July weekend, boating around, tubing. They haven't been to the outskirts of Colorado or Montana to go on a half marathon hike into the wilderness. They haven't been to Lake Tahoe. They haven't been to the Carolinas and the Smoky Mountains. They've only been to New York City, Miami, LA, and maybe Vegas, where they're like, oh my God, I'm never going back to Vegas. I was so messed up after 4 days. Okay? That's not America. Idiots.
When you have like made it in America, when you like go out with like friends into the desert or somewhere else, like out in the middle of nowhere, with a bunch of guns, with a bunch of fireworks, with a bunch of explosives, and you're just like shooting and blowing stuff up or whatever it might be, and the cops come by and they're like, hey guys, what's up? And they're like, oh, what's up? And they're like, what do you got? And they're like, oh, cool, man. Can we shoot him with you?
Has that happened to you before?
Can we hang out with you for so it's just awesome, man. Like it's just the spirit, the freedom, the air is actually clean over here.
Great place.
So
great place. We got AC.
Dude, I could not imagine.
Just imagine that. Yeah. No thanks. All right. Risks. Again, America #1. American exceptionalism, golden era, SPX to a 10,000. You get it. Downside risks to unemployment, upside risks to inflation. I'd think gold rips, equities cautious. Thoughts on that comment?
I think right now, at least, the gold and the equity play are very similar. Like they're very similar right now. I would have a tough time being bearish equities and bullish gold. I think there's going to be a moment in time where that takes place, but I don't see it right now. And I'd be fine being long both. So that's how I think about it. But yeah.
Okay, to tack on to that, what do you think the odds of a red September are now? I would assume he means in equities.
I don't really know.
Seasonality, bro.
Yeah, I mean, I don't know. I don't really care. I just think I'm still bullish equities. I think
it's just more your theory. Like you can't. Again, that's kind of just asking like what a price and time is going to be, right? It's just going to be based on if things in your thesis change, right?
Yeah, like I just think we're moving higher. Like
Yeah.
if things change in the interim, then or the price invalidates my view, then I will probably get stopped out
Yeah.
or in the profit, or I'll lose some money or something like that. But I don't really know what's going to happen in September. I have no clue. I don't have a specific edge or
My
view.
birthday.
Well, that's
I'm a Libra, baby.
a Libra.
Balance and opposites.
Balance and opposites,
Moon
dude.
math. You don't know moon math? You don't trade based off the moon calendar? Idiot.
Unbelievable.
If you don't take astrology into your thesis, like that's where I think you're never really going to make it into the Illuminati. You know what I mean? Like
The big leagues.
you're putting a ceiling on your success.
A cap on capital flows, you're saying.
That's right. No cap. I don't know if the EU has the capacity to absorb capital flow if your thesis is right. What not sure what he means by that. We're talking about
I think he's
like
just joking.
Okay, I gotcha.
But yeah, I don't think the EU has that much capacity to handle some real American spirit. But it's okay. I mean, maybe they'll come up with a FANG one day and actually innovate something. But let's not get into that.
All right. ETH is mooning. Ethereum is an interesting asset. I'll say that much. Let's see here. Usually after Jackson Hole, the market dumps after a nice pump until okay. So like, I'm just gonna kind of disregard this comment just because it's like kind of arbitrary, but like it's a good example of like, hey, something happened a couple times as I vaguely remember them. Which, by the way, this only happens once a year. And Chris, like, do you remember exactly what was said and why and what regime we were in during the last multiple Jackson holes? And is that what you're commenting on so that you can get an accurate read? Like I just feel like this is like going back to the ground up planning here. Is like, it doesn't just because something happened once or twice, which questionable. I just think there's better ways to maybe approach building like a thesis of a portfolio. You have any thoughts on this?
I think it's good to think about past events. I think this is actually interesting in terms of how to build models or a mental model around things. So like what we usually do is we anchor to whatever our most recent or most intense experience has been in like whatever period of time. And I just think you want to aggregate like all relevant information and all historical analogies and find continuity and discontinuity between them. Mm-hmm. And then from there, begin to build it into your thesis. And I think that, I remember I had a friend just say to me once, like, if you have a thesis, if you have an idea about how the world works and you think it's right and you think you're going to make a ton of money on it, and you're going to size up in that view, you need to be incredibly rigorous in how you test that view. So just go test it. Go take it and find every single hole in it. And then figure out where exactly you're right, where exactly you're wrong. And it doesn't even mean that type of trade can't work or something like that, but it just means you should go into it with your eyes wide open about what can take place in the risks and things like that. So that's all I would say.
Yeah, definitely helps for downside management.
Yeah.
This is interesting because this is again goes back to algo and sentiment and all that. I don't know if it's just me, but I feel bad trying to go full on euphoria because optimism seems to be the consensus. And I just think, what consensus? Who? Your timeline, the people you're surrounding yourself with? Is that how the Fed sees it? Is it just like what you're watching on TV? Like, I just think it's interesting how everybody, this was my point before, is that you could have Jay come on here and say this, and I'm not throwing shade here. I'm just like pointing out that there's massive differences here. Like, and then the next comment could be, I think everybody's way too bearish here. We just got the green lights to go into full euphoria mode. I think consensus is that like people are positioned incorrectly and there's too much cash on the sideline.
Yeah, that sounds right.
All right, here we go. Do you think TGA refill will have any impact on liquidity? I think they haven't really started it yet. And
No.
how will they? How will they refill that?
No.
Won't have an impact.
I am aware of it. I don't think it matters right now.
Okay. Does your approach and models work if I'm trading markets in a different country or like a developed country? So how does your approach to things, can you copy pasta that onto different markets in different places?
Totally. So I mean, my approach and the models that I run are on most major countries in the world. I've been publishing a lot about the US recently, and I've had difficulty consistently publishing on the others just because it takes so much time to write everything up for everyone. But the only issue you're going to have in another country is you have to shift your expectations around the currency regime and the balance of payments and whatever the structure of that economy is. But the same underlying principles apply. The biggest difficulty you're going to have is tracking error between data and what is, represented in reality. So basically, the U.S. has the best data in the world compared to any other country. I love that people complain about like non-farm payrolls or CPI. I just think like go pull up inflation in like Spain, Germany. Like go pull up inflation in like somewhere in like Malaysia or Vietnam or Africa, like anywhere. It sucks. So what you basically need to do is figure out how much of a tracking error there is between the data and the underlying situation. And you would need to do that in the US as well. But you need to do that, establish that, and then you can kind of moderate your views from there. But I would say it's fundamentally the same with some different data quality issues that you need to work through.
I think that's a really good answer. What is your view on U.S. mortgage rates, which is kind of interesting considering what just happened? So what is your thoughts on that?
Well, they're not going lower. That's what I'll say. I mean,
what do you mean? Trump said they're going to go lower.
Yeah. I think that on either side, if they cut rates into this type of regime and they get even more dovish, it's just going to push mortgage rates higher even potentially, and that will just and it could push mortgage rates higher even as home prices go up as well, if you actually have enough inflation in the system. So I would not say it's going to get easier or there's going to be this moment. The reason why mortgage rates can come down is because we're going into a recession. That's why. So I think that, unless you have cash on hand and the ability to like weather a storm, like if you're just a regular person in the sense of like, let's say you're making 100, like you have a regular job, you have like a consistent 100K a year, and you've saved up a couple 100K in savings to put on a down payment for a house. Yes, like if mortgage rates come down, you say like, oh, then I can buy a house for cheaper. But you also have to remember, if mortgage rates come down, it overlapped with that, it might also be you losing your job. Right. So it, not to be the bearer of bad news, but it just depends. But I'm just saying you want to think about your income and your cash and why those things would change. And I told someone this the other day, like, what's the major thing in your situation that you can control for like buying a house? It's your own income. So just focus on that. Like, don't worry about mortgage rates.
Yeah.
Like, and just create a buffer for yourself in cash if you have to buy a house at a higher mortgage rate, and just focus on what you can control.
Or now hear me out.
Oh my God.
Go rent at B-rated Sunbelt apartment buildings, which is where I tend to focus on my real estate investments. So I need you to go ahead and be another tenant. And if you're interested in learning more, come on over to school in Bitcoin and buildings.
Everyone on the stream, you should go to Bitcoin and buildings. I truly think that. I mean, I'm over there. I'm a subscriber and a follower. I just think it's going to be good because it's going to be a great learning experience for everyone, like on the community and then everywhere else, like connecting those things and being around the right people. So it
If you like
goes
hard
back
assets, if you like hard assets and you like seeing a guy on a walking pad make videos, it's a good spot. Come on over.
Every time I see someone on a stream now, obviously because I interact with you the most, but like walking on a treadmill, I just think, it's another one of them.
Another one of these guys. Yeah. How many steps have you taken today? Flows? Huh?
How many? Honestly,
Yeah,
I didn't even walk to the coffee shop this morning. I drove because I was running. I had to get back to the stream. It's pretty bad. I have to go for a run. I'm going to go for a run. I always because you're doing 10,000 steps a day, right?
Oh, minimum. That's like a track day. Yeah.
I probably get.
We're at 8,000 now.
I'm doing 8,000 to 10,000, but it's typically on runs because I run every day almost.
Yeah.
But it depends because I'll run 2 miles minimum, but it depends on the weather and some other things and everything else. We'll see.
It's a little hot out there. All right, so I think this is just a good point. We don't really need to talk too much about it, but the overall point being, markets can do crazy things for years, and I know that you like to type all aggressively on X about how the crashes is things are about to get way worse than you'd ever imagine. But as long as we're in this environment, they could stay extremely amazing for much longer than anybody anticipates. So what are your thoughts on the length of time of euphoric phases in markets?
I think that predicting direction is already hard enough in markets, and amplitude is exponentially harder.
Yeah.
But what I would just say is that if I think about it as like this, is like you have basically two different ways that you can make a market top. One is you just go straight down like COVID, right? And if that's happening, it's because you have an exogenous shock repricing the entire world, basically. That's one way. The other way is that if you're trending up, you're going to incrementally begin to shift on time frames. And like before you turn bearish on a monthly time horizon, you're going to turn bearish on a weekly time horizon. Mm-hmm. So like, let me just focus on thinking about that when that begins to take place and not try to call for a 90% drawdown or a 70% drawdown in the S&P 500 while we're still having positive returns on a weekly basis.
But if a daily close goes down 1%, it's all over.
It's so over.
It's all over. Miss Pock, usually fast moves like this get retraced in the next session. This sounds like a person that's been burned before and maybe should step back from trading events and rethink about foundationally taking an approach to their trading and everything we've been talking about. So we'll move on from that one. Somebody says, thanks for that, Flows. I needed to hear it and be reminded. I don't know what he was talking about, but you said something impactful. So congratulations. All right, Zach Lloyd coaching. This guy's picture pisses me off because he just looks like a dude that's going to give you, great workouts and all that. But he's going to be like, he's definitely going to talk to the person at the front of the gym. He's going to know everybody. Look at that guy. Unbelievable. Good morning, gents. If I'm trying to make generational wealth with meme coins, can I keep using the Russell as a helpful guide and indicator before I perfectly sell the Pico top?
I like Zach. We've chatted in DMs, and he's like a super good guy.
Okay. So on a serious note, do you think the Russell is a good kind of indicator of excessive out of the curve risk? So maybe if you are looking to take more risk in the meme coin arena, the Russell going up would be a helpful tool to look at.
Yeah, 100%. Like, I think if the Russell is outperforming, it means capital is moving out the risk curve. And especially if you see stuff like SPACs coming out or whatever, the IPO market popping off, all of those are very positive signs for crypto. But I would say on the meme coins things, those can go up and down 100%. without like even thinking about the Russell. So it all depends. But yeah, I would say broadly accommodative. And I would just look at, I always look at, I don't trade meme coins as much as you, but I always just look at the relative performance and try to have a view on why relative performance is taking place.
Also, just remember meme coins, like I can't remember what site. It's either CoinMarketCap or CoinGecko. There's a chart that says total like meme coin market cap, and we're not even like sniffing at where the top of that was before the Trump trade back in the day. Actually, an interesting signal for that space. When Trump and Melania coins came out, do you remember that? You remember when that happened in Q1?
Yeah, totally.
Okay, so there was this massive rush of capital into the Trump coin, right? And this was off the back of like a month or two of amazing, crazy meme coin trading. And we didn't actually even hit a new all-time high in meme coin market cap before Melania hit. So it was actually like an interesting signal, like that there wasn't that much new money coming in. It was more people kind of rinsing the meme coin money that was already in existence. And that was actually an interesting thing to look back at and to be like, oh, maybe there wasn't really that much money coming in as we felt like there was. It was just a game of musical chairs. So I think going and finding that too, figuring out how much money is even in that ecosystem right now. What can I really expect from it? What, is ETH making all-time highs? What's the alt season total 3 chart look like? How is the Russell doing? What meme coins have survived all of this time? What communities still matter? What's being talked about? All of that stuff is like a consideration I take. And then I go to a chart and I'm like, which chart is like the best looking one here and why? That's how I like approach memes. I think it's a fun game, because I like to have fun and Global Flows doesn't. It's true.
It is very true. However, no, I'm not going to talk about the meme coins I own. I think that what was I going to say? Yeah, I think that like I remember buying the Trump coin, not when it first came out, but like a couple days after. And then I made, I don't know, like not a lot of money, like 40 or 50%. And then, but the Melania coin came out and it sucked all the money out of the Trump coin.
Yeah.
But I just think it's interesting that you can have what you just said. Like you could theoretically have meme coin market cap remain constant over the next 10 years and just crazy churn in the underlying things.
That's what's happening.
Yeah, totally. Yeah. So I think that's, and then in the interim, the Russell can just go up and melt up and just continue to move higher because it's a higher representation of the U.S. economy, which is why maybe you just buy calls on the Russell. But hey,
that's right. Calls on the Russell. Imagine being that boring. God damn it. Jesus Christ. No, but yeah, I mean, like, you're totally right. But then the next question you have to ask yourself is like, what is my edge in the meme space? Right. Totally. Because like, if you don't have a specific reason as to why this is a good buy, dude, you are getting last place. I promise you. You are last place into those coins. So do you have a cabal that has inside info? Do you know how to look up if coins are bundled or if they're distributed well? Did you see something before everybody else saw something? Do you know something about the team that other people don't know? All these things matters in meme coins so much, or else you will be getting wrecked left and right in this churning thing because it is grift season. Like Kanye West coin came out 2 days ago, which I'm sure you didn't even hear about. Absolute grift. There's a whole story behind this, but like, do you remember the Libra token with the whole grifting from the Libra token?
You're kidding, right?
No, the guys got their like accounts back or whatever that were attached to Libra token the day that the Kanye token dropped.
Interesting.
Unbelievable grift is happening.
What's the Libra token?
What's that?
What's the Libra token?
It was the Argentina coin after Trump and Melania.
Oh.
Dude, it's a whole story. It was amazing. CoffeeZilla did a breakdown. The guy didn't go to jail somehow. Unbelievable.
Interesting.
Anyways, the point is these guys are taking advantage of you thinking you're on Twitter, seeing something in real time. You are not. And if you don't have a blatant edge, go trade calls on the Russell. You know what I mean?
Totally.
All right, so we'll do a couple more minutes here, and then anything standing out to you on markets right now, or is it just a continuation?
I think we're just, we've moved to the extremes of intraday ranges, and we're just kind of, people. No one wants to, bet against anything like this. I mean, we're still at 9 a.m.
Yeah,
none of the 0 DTE. People are monetizing their calls right now, but we're probably any type of downside would probably be after midday. And it's not something I would bet on here. So it's just not the play. I don't have a strong view on it.
You mentioned predicting. We'll take a couple more questions, guys, and then we'll wrap it up in about 2 hours. You mentioned predicting where markets move is difficult. Yet, what tail end risks are looming around the corner in this macro and geopolitical environment? So is there anything tail risk wise that's like you're really worried about or think is coming around the corner, or are you sticking more to a process to help you with that?
Yeah. So in my pinned tweet is the link for this report where I lay out all of the tail risks that I'm thinking about right now. Because I think that's it's the report that we talked about that you read. I think here's the thing I think about a lot is like I want to understand all of the tail risks incredibly well if I want to be long. And I think most people, what they do is they talk about tail risks and they just kind of leave this lingering kind of just like, I don't know what's going to happen, but I don't want to be stupid and be long equities here. Cash sounds like a good idea. It's just like I forget who that guy is that just brings up bear porn all day long, and then it's just like we don't know what's going to happen, so cash is safe.
Right, wealthy on.
Yeah. It's like okay.
Careful, we don't throw shade around here.
We don't throw shade at all. Everyone has their roles. So yeah, I think that the understanding the tail risk is really important. I laid all of that out in the report, and I think the main risk is about cross-border flows because one of the charts that I would encourage you to go through so you get the context in this report, and it's wherever you're watching this, it's in my pinned tweet. So if you go on my Twitter account, you can see the pinned tweet that I shared. It's in the pinned tweet, and you can just look at the report date and whatever else. You can figure it out. You guys are smart. I feel like at this point, you can't figure out how to go down the rabbit hole and find something that people told you about. You're not going to make it in the modern world. Here is a chart of the current account for the U.S., which just means in terms of the net amount of things that we're importing versus exporting every single year on an outright basis and relative to GDP, where are we? And we're off a cliff on an outright basis. And then relative to GDP, also, back down to almost, we're getting close to 2006, 2008 levels, pre-2008. And the reason why that matters is because if I as a company or me as a company imports goods or services from another country, I go to that country, or I don't go to the country, but I'll go to that country and I'll give them dollars. So I want their, widgets, their semiconductors, whatever it might be. I give them dollars. Now they have dollars. They can't use those dollars inside their own country. I mean, I guess they can use them for reserves and stuff like that. But broadly speaking, they're going to take those dollars and they have a choice. They're either going to buy stuff from America. Oh, I want to buy, I want to use the CRM for, Microsoft or, Salesforce or something like that. I'm going to use that. And then I give my dollars to the US and their goods and services. Or my other option, I can hold them reserves at the central bank, or the central bank will hold reserves or stuff like that. Or I can buy US assets. And when you have this going down, this current account moving down, it's showing the net impact of the US importing more than they're exporting. and its relationship to the rest of the world, which means the rest of the world has a lot of dollars that they're getting from the US, and they have to put those dollars somewhere. And they're not buying enough stuff from the US to cause this to go back up. So if every other country in the world, they exported their goods to the United States, they got their dollars, and then they took every single one of those dollars and bought stuff from the United States, like just goods and services, this number would be at like basically zero right now because it's neutral. But it's not. And what's happening is you're having foreigners basically put the majority of their money in US assets or for the dollars that they're getting from this. And so that is, I would say, one of the biggest risks because we have, in terms of tail risks, much more significant than all the Fed watching, because that's if the Fed cuts or raises rates, that might not necessarily change how other foreigners are impacting foreign direct investment, right? Can, but if they're selling indiscriminate of the Fed's actions, that can cause an unwind that's pretty significant. So that's the biggest tail risk that I think about. And there's some qualifications for that and some other, the signals and playbook for that is laid out in the report that I shared. It's in the pinned tweet.
And isn't historically one of the ways that we try to increase GDP is injecting more liquidity into the system, which then feeds back onto the problem that we're already having here, which is long end inflation data or long end inflation blowing out to the upside, which could just crash everything.
Yeah, like people think that. Yeah, people think that like the Fed injecting liquidity is always a positive thing for risk assets,
right?
But they forget that those risk assets are denominated in what? US dollars.
Mm-hmm.
And so people like foreigners, they're not just looking at US assets going up. They're looking at US assets going up plus what's the return of my dollars.
Yeah.
Like if you go into another, like I said, did we say this previously? Or I was like, if you go into another country to buy their index and you buy it and it goes up 50%, but then the currency goes down, you could lose money even if their index goes up, their stocks go up, just because the currency is devaluing as the stocks are going up. And so, on net, you're not making money and you might be losing money. And it's the same thing anytime you buy assets in another currency.
Okay, sorry, I just have to inform you. Trump was nothing but down after the first day. That is not true. I didn't even trade Trump, so I didn't trade that. But it went up for multiple days from 1 billion up to almost 80 billion, I believe.
Yeah,
and then after that, once Melania token hit, we went down only.
Yeah, this is not the right chart. Like
no, it's not. It's
this because that's what he's
looking at. That didn't even start till after. You had to be there. Let
me see if we should find it. Let me get the chart.
You could probably go to like I'm not sure what will have it, but like
I got it.
Maybe some sort of crypto one. But I mean, it went from 1 billion up. It went. Where do you think it got to that price from? You know what I mean? It didn't open at 80 billion.
Here, I got it. It IPO'd.
The only reason I say that, pleb, is because I fucking just watched it go up the whole time and didn't get to participate.
It IPO'd. I don't know if this is the IPO mark, but I know it started trading around like $10 or $20 down here.
I think it was less than that.
Yeah, I remember it was like
500 million. I mean, I first heard about it like 500 million, and then it went up, 1 or 2 billion. It doesn't matter. I was just making a point that like there was more before that, and I didn't trade it. I'm just saying the whole market. That was one of the crescendos of the Q1 meme coin market.
Yeah, I think the key is it pumped before it pumped before it dumped. It didn't just it wasn't just like it got released at $80 and then everyone just mega sold it, because it got run up first by the market, not by anyone else, right?
Yeah. Anyways, just whatever. It was just an interesting thing. All right, 2 more questions. The last one you'll really like, but Hakuna, your tatas. By the way, shout out to that last one, Something Wong, and it's a Pepe. Like, that's fantastic.
I love it. I love it.
That is fantastic. All right. In regards to Japan, we have heard about this from a few people out there talking about long-end rates in Japan. There's some weird thing that Weston Nakamura was talking about with like Fed or prime ministers or whatever stepping down. What are your thoughts on Japan here?
I am still getting a better view on that. I mean, I'm aware of it, but I don't have a specific edge to say that I think this is going to happen and this is the impact. So I would defer to Weston on that. But I'm going to be looking over that, looking into that more over the weekend and kind of developing more of a view. So I'll probably go over it more then.
Yeah. If you guys don't follow Weston Nakamura on Twitter, he is Across the Spread, I believe is his thing. He does the best coverage for BOJ stuff. And usually talk about a guy who thinks originally. He always seems to have thoughts that make you go, a little bit.
Totally. Yeah, he doesn't publish often, but any of his things are like, oh, wow, you know what? Wasn't thinking about that, you know?
Yeah. Okay, last thing here. Great question. Not necessarily a markets question, but top career life advice you'd give someone. Obviously, everyone's life is different, but it would be nice to hear your perspectives.
What would you say about that?
Well, ironically, this post just came up retweeted by somebody and one of our favorites. Let me put this up real quick. Share my screen. It's our boy, Naval. And I think this one is fantastic. Fast, lift, sprint, stretch, meditate, build, sell, write, create, invest, own, read, reflect, love, seek truth, ignore society. Make these habits. Say no to everything else. Avoid debt, jail, addiction, disgrace, shortcuts, and media. And what a final banger line. Relax. Victory is assured. I mean, fuck. That's a banger right there.
It's good.
Me personally, Michael, I just like having fun in my life. I think I'm 37 now. I have 2 kids. I'm at the point where I'm asking a lot of the existential questions of like, how do I prefer to spend my time? Where do I direct my energy? And my life is super simple. I'll talk to Global Flows every once in a while. I like to walk around and stare at the sun and the neighborhood, and I love coffee, and I like hanging out. I like the sauna. I'm a simple dude. That to me is like that, and I like to talk to a lot of people who are extremely, much smarter than me. And I think my biggest like moments where I'm most like jacked to the tits is like when I come off a great conversation with somebody that makes me think, and eventually that leads to me making more money. I think conversation is like so slept on because it really pokes holes in the way you're thinking, especially if you're around people that are not just like, saying yes to what you're thinking, that are just, they're poking holes, making you think different. So I really appreciate good conversations and living life in a chill, fun mode. That's it for me. Flows has no advice for you.
I don't know if people want career and life advice from me.
Hey, you're betting on yourself, and I think that's one of the best advices, especially moving forward with the ability to create and explore and utilize being an idea guy more. I think you're a good example of somebody who found their way into something amazing by just betting on themselves. I think that's
I think here's what I would say. I think out of principle, if you want to, accomplish exceptional things, you have to become an extreme person. It's just the only way. And I think that even if you want to, I was thinking about this the other day, like even if you want to accomplish something above average, you need to go to an extreme place, or else you'll undershoot the goal that you have. And maybe you'll overshoot a little bit and then you can normalize. But you would rather want to overshoot because you have limited time and then normalize than undershoot and not hit your goal. And, I just think about, my life is pretty simple overall, but I would just say that, my entire life is focused on, I would say the foundation of all of the life advice and career advice or whatever it might be, it always comes back down to like my relationship with God, and that being the foundation of all my decisions. And that informs every single thing that I do. Because that is how my identity and decision-making is framed. And then I would just say on top of that, I'm supposed to be a good steward of everything that I have in terms of like my gifts, my talents, my time, my energy. And then I think you have great advice like Naval of just like orient yourself toward these things and you'll get better at thinking over time and making bets. And I just think that you want to so consistently execute in whatever your expertise is over time so that your success is inevitable.
There it is. Inevitable success. All right. 2 hours, 12 minutes. Powell sent the markets. We'll see if that pans out in a good way in the long run. I think it was an interesting Jackson Hole. More interesting than I expected, I guess. Thought it would be a little bit less opinionated or something. Any final thoughts for you? And where can people go? I guess they're all following you from here anyway, so they already know you. But any last thoughts before we wrap?
I've published the research on the Substack. I just released some models. I'm going to release some other special things for people on Sunday for everyone who is a subscriber. So if you're, a subscriber on the Substack, or if you're, thinking about it or whatever else it is, probably want to do it before Sunday. I'm not going to give away the whole kind of thing of what I'm doing, but now is the time. And then I would encourage people to follow. If you're following me, you should follow Ski God and the Bitcoin and buildings thing he's doing. I'll be in there. And then I just think it's, there's a lot of, I'm sure we'll do conversations in there for that community and things like that. But I'm looking forward to Friday night and the weekend, getting ahead. That's what I'm going to be doing.
Getting ahead?
Yes.
All right. Well, I'm going to go hang out with some friends and eat some tacos tonight and getting behind. So this is why you have the balance of opposites.
Exactly. It's okay. I'll do all the work, and then on Sunday we'll talk, and you'll be like, "Tell me all the stuff that I need to know." And I'll be like, "Here you go," and you're just like, "Cool. Now I can."
This is why I surround myself with people. This is why. It's a trade in itself. I invested in our friendship at the lows, right? And now my stop loss is at break even, right? It could go. Our friendship could go way down from here.
Not when we were at the lows.
No, yeah, well, we're talking 2020. Actually, yeah, I bought the physical lows and your friendship lows, basically. And at this point, it's just been a good trade for me. So I might as well keep the position on.
Up and to the right. So.
That's right. Everything is up and to the right. Life is up and to the right. Get over being a doomer, guys. Right? Hopefully, global flows will let you know when it's time to be a doomer. Until then, up and to the right.
Agreed. All right. We'll catch you guys later.
See you guys.